All right. Part two, part two, part two. So yeah, what I was doing in the first part is going left, right? Going left. Doing some back testing to show exactly how everything works. Okay, I found another area where it's happening again. So I'm gonna zoom in. Now, I was posed a question is like, does it always happen on a 15-minute? No, it can happen at any time frame. It can happen in the 5 minute, it can happen in the 3 minute, it can happen in the 1 minute. Okay. So, I mean, we could take a look at that as well, but I'm in the 15-minute time zone right here, time frame. Okay. And you just got to be patient enough, wait every 15 minutes to see what will develop um right at or above the EMA, right? So here's another one. Okay. So here you see that this is a shooting. Well, this is an inverted hammer. Well, this particular candle, okay, is very deceptive because it looks like a hammer, right? But it's not a hammer. It's actually a candle that pushes up, right? It has a long wick on the bottom here, okay? And but there's your reversal candle right there, okay? This candle right here is your reversal candle, which is a doji. So it's telling you that the market makers are about to reverse this particular trend because right here is down. It's going to reverse and go up. Okay. So it is right at the EMA, right? Or right at the moving average, I should say. Right at the moving average. And what happened? It pushed off. And again, you get in on this candle, right? And you set your long position. So you got in here. You're gonna go ahead and stretch it out to you below right here for your stop loss. And you're gonna stretch it out to 2.5. All right, 2.5. And what happens? Looking right, this particular candle, the wick hits your TP and you're in profit. Look at that. You're in profit again. Now you could take a one position or you could take two positions, two orders, and just say, okay, I'm going to profit on this one, and I'm going to let my second order just run with the market and see how close it'll come to my stop loss. Because right now you're in profit, but once you're in profit, you can go ahead and move your stop loss to break even and say this is your stop loss. You can move your stop loss on the second order, right, to either break even, which is right here. That would be break even, okay, or a little bit above break even, like right there, because that way you secure at least this amount of profit, and now you could just walk away, set it and forget it, and say to yourself, okay, whatever happens now, okay, I'm in profit, so I'm gonna just watch it if you're watching the charts to see how high you can get to, and once you get to a high that you're comfortable with, you manually close out your trade, and you would profit from all of this right here, okay, or you stretch out this to 1.3, 1.3, just to get a little bit more profit out of it on the second order. Okay, 1.3, this is 1.3. And you look right and look what happens. This candle, actually, this one of these candles here, like this one right here, and this one right here, the top of that candle, hit your take profit. And now you just made money on two orders, okay, based on this strategy, okay. And again, it happens on the 5 minute as well. But let me add two more indicators. Okay, this particular indicator, this should give you some more confidence. Look for this indicator, smart money concepts. by Lux Algo. Okay. And what this indicator does, it gives you automatically where your break of structures are. So let's make it bigger so you can see that. Go to settings. Whenever you see the word tiny, you're going to make it normal. Okay. So you're going to make it normal so you could see on the chart the break of structures, either on an upswing and a break of structure and a downswing. So whenever you see a break of structure, quick tip, like you saw this break of structure, this candle was higher than the previous white candle over here. Just know that it's going to pull back. It's got to pull back and come down these levels here. Okay. It's got to come back down here because there's a gap. All right. There's a gap. And it's got to come back and touch and fill that gap before it pushes up higher. Okay. So this is a gap. Okay. So another tool you can use to find those gaps is fair value gap. So I'm going to take off this one and put another indicator called fair value gap by Lux Alco. Okay. So I'm going to put that fair value gap right there. Okay. And it tells you where the fair value gaps are. I think I got to change the color so you can see it. Probably not live because the market's not live. Okay. So when the market's live, you'll be able to see the fair value gaps. And it pretty much shows you where the fair value gap, this would be considered a fair value gap, this particular area right here, where the market has to come back and fill the fair value gap. Okay. Which it did right here. Okay. So whenever you see a green break of structure is a good thing. But then when you see a red change of character, it's going to reverse on you. So you want to stay out of the reversals because you're in an uptrend. So if you know what trend you're in, you're just going to wait for the change of character and the BOSs again, break of structure, okay, and trade based on an uptrend. Stay out of the, don't trade downward unless it's your strategy. But okay, so it does show the value gaps. You see these little red lines here? So if I take away the money concepts, you see the fair value gaps. So this is red fair value gaps. So because it's trending lower, so when it trends higher, it'll be whatever color you give it. So if it's green or white, you'll see white fair value gaps. And this basically means that the market's got to come back to these areas and continue its upward trend or downward trend. So right now it's trending lower. So it's telling you this is a gap, right? And a gap is pretty much an area that needs to be filled. All right. So if I was to take out this and show you that this right here and this right here, this area between this wick and this wick is an area called fair value gap. Okay, there's a gap. So the market has to come back into this area, okay, and it'll bounce off this area and come back. As you can see, it didn't quite get there with this candle. So you got to be patient, right? But we're not trading downward, we're trading upward. So what we're waiting for is a fair value gap. What we're waiting for is a change of character and then a break of structure. So if we put back this smart money concept, we're waiting for scenarios like this. Change of characters. We're waiting for change of character. Break of structure. Okay. And again, a break of structure is basically a candle on the right is bigger than the candle on the left, which is a higher high. Okay. A higher high. Okay. All right. So if we were to minimize all that and take one away, and as a paid member, you get more indicators. You can put more indicators. But as a free member, you only get 2 indicators. And we put our moving average exponential back on. So you can use those as tools. As you can see, we're over here again. Bullish engulfing above moving average. I'm going to put at 100. Always put at 100. And if you want to change the color, you can do so. Okay. And then you just wait. Just wait. And you put this smart money concepts back on. Bam. Okay. All right. So hopefully that will you find value in this particular trading strategy. So that's what I'm going to be doing going forward. Teaching you guys exactly how this works and helping you make it part of your trading plan. All right. So in a recap, you have your moving average, you have your smart money concepts, and your fair value gaps. Those 3 indicators is all you need. That's it. Those 3 indicators is all you need. That's all I'm going to be using going forward. Okay. And again, recap, you go to the weekly, you look at the trend. We're going to take out all these indicators and just do a naked chart. And take our arrow and do one of these numbers. There's a high, lower high, higher high, lower high, because this low is higher than this low, and then we got a higher high. So that, what does that say? Uptrend. If we were over here, a low, right? Well, we got a low here, a low, a lower high, lower low, lower high, lower low, lower high, lower low. So this is a downtrend. Okay. And that's how you read this stuff here. Downtrend. Yeah, my stuff is frozen. And that's what happens when you conduct a productive training session. Things starts to get freeze on you. So hopefully you guys can still hear me. If not, I'm going to go ahead and end the session right there. Thanks so much for spending some time today. Come back next week and we'll continue this training in our journey towards profitability and prosperity. So don't forget, next week, get your brokerage account, get your demo account, and practice, practice, practice your trading strategy. All right, y'all. Thanks for watching, and I'll talk to you next week. Bye.